Good morning, ladies and gentlemen. This is Butch Shorak. It is Monday morning, March 25th, 2013. Options University Market Forecast. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment security or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money you cannot afford to lose. And what is it that the market did last week as we were due for a pullback? Did we finally get that pullback? Well, let's take a look. Dow down 2 points for the week, basically no change. NASDAQ down 4 points for the week, 0.1% down. S&P 500 down 0.2% for the week. And we look at the Russell 2000 down 0.7. And if we look at the year to date, we're still at a rate that we cannot keep running at this rate for the rest of the year. As we are getting ready to close out the first quarter, we see that the Dow is up 10%. The NASDAQ up 7.5%, S&P 500 up 9.2%, and Russell 2000 up double digits, 11.4% for this year of 2013. Let's take a look and see what is going to happen in the next week and what economic announcements there are that may affect the market as we move forward. Looking carefully at this, we see that on Monday we have the Dallas Federal Manufacturing Survey coming out at 10:30 a.m. on Monday. And then as we look at Tuesday, durable goods orders and S&P Case-Shiller, HPI, new home sales, consumer confidence. Tuesday is kind of loaded, isn't it? And as we look at that, these are the things that are going to tell us what is expected of the economy as we move forward. What's going to happen and what kind of an input is new home sales as we're seeing that move forward as we come into this new year? And will that provide a boom for the market that'll help support and take care of the things that are happening to us as far as the sequestration and the mandatory cutbacks that are soon coming? Where is all this going to lead? Well, you can bet on one thing. With Mr. Bernanke at the head and possibly a new QE, who knows what he'll do, but backing up, remember that old rule, don't fight the Fed. Looking at Wednesday, we see we got a pending home sales, so we got news coming out this week about what's happening in that housing market. As we come into Thursday, we get that all-important GDP. Where is it? How is this market functioning? What is this country doing? Then, of course, every Thursday morning, we have jobless claims at 8:30. Then the Chicago PMI at 9:45. These are all things that have been known to move the market at some point. And then as we look at Friday, we see that on Good Friday, we got personal income, and we've got outlays going to take place, and consumer sentiment coming out at 9:55. But the equity markets are closed on Good Friday, so we've got a shortened week this week, and one that you can take advantage of for the next week. Take advantage of that closed market where you might be able to get some theta out of the market and not have the access to the market and no movement. So it's like free trading for those of you that know how to sell options and take advantage of theta. All right, now let's take a look at the SPX for the week, and we see that we are trading in this sideways trend. We've kind of flattened out. Overall, we are in an uptrend. We notice that we are sitting above the 200-day moving average, above the 50-day moving average, above the 30-day moving average, and can't even manage to get down to that 30-day moving average as the market shows a great deal of resiliency, even if with the fact that we had bad news coming out of Cyprus, which really could have an effect on Europe. The market basically went flat for the entire week. Looking at each day individually and a little bigger, we see that as we look at Monday, Tuesday, Wednesday, Thursday, Friday, we see we never even came down to that 30-day moving average as we consolidated going sideways, taking and consolidating and absorbing some of this rapid rise that we've had as we head towards that inevitable goal of 1576, which is the all-time high for the S&P, and there is a little doubt in anybody's mind that we are going to get there. It's just a matter of time. Remember, that's a conjuncture or a guess at this point, but certainly a pretty solid one as the market keeps moving up with this underlying strong bullish tendency. And we could get there in this next week or the week after. Looking at the Dow, let's take a look and see what we have. Well, surely remember, we will be moving into the next quarter, and the second and third quarter are not going to run at the same levels that this first quarter has. But looking at the Dow, which is all brand new territory, look at it also. Went sideways for the week, going absolutely nowhere as we wait for that next move up, which it most likely will follow the lead by the S&P, which will pull the Dow into even higher highs as we move forward in this bullish market. NASDAQ, well, kind of a little more volatility. Notice the bigger candlesticks almost came down to that 30-day moving average. And we even had Apple provide some movement for the NASDAQ. But you see our little old tech index is not showing us any big, huge moves to the top side. Looking at the Russell, which was the down for the most for the last week, we see that it basically followed that same pattern. Going sideways, look for a breakout out of this as the overall market heads up. More than likely, our small stock index will move up with the overall market. Remember, it's many times a leader for us as to where we're going. Let's take a look at some of those sectors and see how the sectors did with this flat week. Well, exactly what did they do? Well, of course, the VIX really has shown us little or nothing, a little more fear in the market as it did not continue its upward rise. But, you know, we're still in somewhere between 15 and 10, which is really a very low volatility as there's not much fear sitting in the market at this particular time. Remember, this affects our option premiums, and so you have to be a little more careful as to how close you are to target prices and everything else so when you're trading with this lower volatility market. Next, let's take a look at the bond market, looking at TLT. And it is our 20-year Treasury bond fund, and we see that it followed the overall market going sideways, actually broke out of that previous low that it was sitting in down there. And so as the market went sideways, we got a little bit of a move up out of the bond market. All right, next let's take a look at our financials. Looking at our financials, we'll look at XLF, which is our exchange-traded fund for our financial sector, and we see that as the market pulled sideways, this actually pulled down a little bit. So if this thing hits the 30-day moving average and then you get a higher high and a higher low, certainly could give you a buy signal out of XLF. Our financial equity index that really can give you a chance to diversify your portfolio by utilizing these exchange-traded funds. Looking at oil, we're going to look at USO, another exchange-traded fund, and we see that oil's creeping back up nowhere near the high for the year. Certainly doesn't feel like it at the gas pumps, but we're not even up near that 35 point that it once was at just in the month of February. So oil bounced up as the market pulled back. And finally, let's look at that safe haven where money goes when there is fear in the market, and let's look at gold. Looking at GLD, our exchange-traded fund for that, we see that it has done nothing but trade sideways, no great fear, no great move out of the market and into gold, as we see that we just went sideways for the week. However, we are at higher highs than we had been earlier in the month. And finally, what kind of volume did we have during the last week? We basically had average volume as the market moved sideways, looking for that new high in the SPX. That new high is going to take place around 1576. So we see that we had quite a week. We've got news coming out this week about where is the economy going as we go forward. We've had news out of Europe with Cyprus and their banking problems, and we'll see if that has an effect on the market as we go into the next week. We certainly could use a little bit of a pullback. That's what normal markets do, but it seems all we're getting is that sideways move. And as we look at the futures, we see futures are up as before the market opens on this Monday morning. So with that thought, those of you that are gold members, stick around. We'll go through our stocks to watch. And for those of you that would like other free videos, you may go to www.optionsuniversity.com/free gold. So with that thought, Here we got another week in this bullish market, and this is Butch Shorak Options University, Monday, March 25th, 2013. Ladies and gentlemen, thank you for being here.